Okay, continuing on with our depreciation expense chapter in chapter 9, we're now in section 19.3 where we will complete a plan asset record and also work on journalizing our annual depreciation expense. So, as we kind of talked about already in our last section, accountants want to make sure that we keep separate records for each plant asset. So we have a specific form, it's called a plant asset record, and it's an accounting form where our business records information about each plant asset. Now, most plant assets, although they might look different, most plant assets are going to contain similar information, and they are going to have three sections. So section 1 gets prepared when the plant asset is originally bought. Section 2 is going to be completed when we record the disposition of a plant asset. Disposition just means disposed of, okay? Once it gets sold, whether we just discard it, we fill in section 2. And then section 3 is where we record annual depreciation expense and then the changing book value of the asset each year it gets used. So this is an example of a plant asset record. It looks very similar to kind of what we worked on in section 19.2, except it has a few more sections. So section 1 here talks about when the plant asset is bought. It talks about a description of the unit, what plant asset record number it is, and then any specific information related to that plant asset. So the actual date it was bought, if there was a serial number, the original cost, how long we intend to use it for, what we think we can get when we get rid of it, and then the depreciation method. Also in the upper right hand corner, it talks about any general ledger account information. So it says that the general ledger account number is 1120, and then also that it is recorded under store equipment. Section 2 here again is where we talk about if it is disposed of. We aren't actually going to write anything in section 2 in this chapter because we won't actually be disposing of those, but it talks about if it was discarded, sold, or traded, the date, and then what amount we got for it. And then section 3 is what we've kind of already worked with in our last section, which was talking about annual depreciation, accumulated depreciation, and then our book value each year. So at the end of the fiscal year, the company actually calculates the depreciation expense for each specific plant asset. And then that depreciation expense gets recorded on the plant asset record that I just showed you on the previous slide. Then what we need to make sure that we do is we total up all of our depreciation expense for all of our plant assets. And then what we end up doing is making an adjusting entry in our general journal. So an example says that a company determines that the total depreciation expense for its store equipment was $25,146. We then go to our T accounts and we think about it this way. Remember, we're not actually going to touch our plant asset office equipment. We don't touch that. Instead, where we record this adjusting entry is in the contra account accumulated depreciation. And so we have our depreciation expense gets a debit and the accumulated depreciation expense gets a credit, which I alluded to when we talked about that in section 19.1. So what that actually looks like, remember that this is the unadjusted trial balance. So this is just showing you what your total for office equipment is and then the total for accumulated depreciation. Then in our general journal, we need to make that adjusting entry where we debit depreciation expense and credit accumulated depreciation for our office equipment plant assets. Now, the other thing to make sure of that we understand, and I think at this point, hopefully we do, is that we always want to make sure we retain the original cost information for our plant assets. That's why we never actually credit depreciation directly in a plant asset account. We always use our contra accounts for accumulated depreciation because that makes it very easy for us to be able to find our book value, which is where we subtract our plant assets accumulated depreciation from the balance in our plant asset account. So it would make it a lot more difficult for us to do that if we recorded depreciation directly in the plan asset. That's why we use the contra account. So a rather short lesson today, actually. So we can go ahead and head over to our 19.3 work together, and we will do some journalizing of depreciation expense.